Hi, welcome to the Market Alert for Tuesday the 10th of March 2015. Starting off in the 5-minute chart, the pre-market session fairly quiet. We see the market breaking back above the 17,850 level here, and then just on the open, which is at 130 at the moment, so we see the market being tested and then prices driving up to the 17,900 level there. Just going through, a lot of selling coming into the market, stopping the market from moving higher. As the market failed to close below the 17,900, the selling is absorbed, and we see the market then moving on and then pulling back slightly, and then we get a buy signal, and we see the market moving higher following this. I'll just draw this in for you. You can see it took a moment or two to get up to the 20-point scalp, and then we see the market coming back through, finding support at the 17,950 before continuing on up towards the psychological 18,000 level, which is a big level there. So we get a potential sell signal. This is in no man's land, and I call that no man's land because the market's between the two psychological levels here. So when you apply the sell markup there, you see the market coming back down, and you can see there the entry price is close to the 17,950. You see the market touching this, then finding support. So there's a clue here that there's already a problem. You've got a psychological line that you need to overcome. It would be a lot better if the entry price is below any psychological line, as I've said before, because the market will have already dealt with this and then is able to move lower. So we see the market finding support. The next bar reverses, it closes higher than the previous bar as well. We do go back on the next one, but then we get a buy signal that comes into the market, and once again we see prices moving higher. You see coming back to the break even here. We then get a second one, and then the market continuing higher. So in this one, as the market drove straight through, you can see there that making the higher lows up to the upthrust. So this one will be stopped out around 18,022 from the 17,972. So a 50-point move there. I'll just use the tool just to draw in an arbitrary one there. You see 49 points there. So a 50-point move on this one with the 20 points in there, and then a small loss in this one here, which I'll just calculate for you. So we had the sell there, followed by the buy. So you've got the difference between the two reversing the trade, which we see with 17,957 to 72 there, which is a 15-point loss there. So that one to come off, but then 50 points and the 20 points there on the first trade as well. Right, let's have a look in the daily chart, see what the market did yesterday. You can see a straight reversal yesterday, market coming back, but obviously finding some resistance because the overnight market, you can see where it's open from the close, not moved higher and taken out the previous day's high as yet, and moving lower there. On the news front today, we've got, let's have a look. 2:35, Carney is speaking. Now this will be interesting. This is a tough one because obviously it's more likely to affect the UK markets than the US. So if you're trading the pound or the FTSE 100, then you may need to take note. But I don't think it will have the same impact as when the Fed chairman speaks, or chairwoman as we've got now, when Yellen speaks. How this affects the UK market and the global markets. We don't have that same impact, and certainly Carney doesn't, but just something to be aware of at 2:35, which is an hour after the markets will have opened. And finally, on the implied volatility, we've got down from 13 yesterday to 12.77. No surprises, the market moved higher yesterday, and again that's reflected there in the price chart. Right, that's it for me for this morning. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated, and with a bit of luck the markets will continue to trade the way they are at the moment. Thanks for watching, see you in the next one.